Welcome to another episode of Bulls, Bears, and Blockchain on Revolution Radio, making smarter financial decisions with your host, Rob Nelson, former Fox News host and anchor at Roundtable Media with his team of market masters, Marc LoPresti, Managing Director of Moneta Advisory Partners, co-founder of Battlefin, leading data platform, and a former institutional equities trader at Lehman Brothers, Alex Mascioli, founder of Trade the Chain, former head of institutional prime brokerage at Vquant, John Najarian, co-founder of Market Rebellion, former co-host of Halftime Report on CNBC, and co-founder of Option Monster and Trade Monster. Daily data insights and ticker updates direct from three of the world's top TradFi, legal, and crypto experts on Bulls, Bears, and Blockchain every Monday and Friday on all your favorite platforms. Let's get started.
Good morning, good afternoon, and good evening. Wherever you are, whatever time zone it is for you, you're listening to Revolution Radio's Bulls, Bears, and Blockchain. I'm your host, Rob Nelson, and I've got my team of market masters, John Najarian, Marc LoPresti, and Alex Mascioli, giving you their expert advice and insights on everything TradFi, DeFi, legal, and crypto. Guys, always good to be with you. Let's get this thing started. What a week we're having. Dr. J, Alex, Marc. It's been a crazy couple weeks in the market, and so this is our Friday show. Full transparency, we recorded at the end of the day, close of markets on Thursday. So any numbers we're giving you can change. I like to look at what you guys picked on Monday and sort of see what happened and highlight something that kind of stands out. I'm going to start with you, John, Dr. J, because you picked Uber, and Uber did just as an option, did absolutely great. 28%. What I'm looking at is a 28% up change. Now, that number is obviously changing, but it was 250 on Monday, and it was 320, I think, at the close today, or at 4 p.m. What was your thinking behind it, and what are you looking at going forward on?
Issue with Uber is Lyft had bad numbers, Uber had great numbers. And we know there are not just two choices, but there are mainly those two competitors in the space in the United States. There are a host of others, but they are much smaller. So the fact that Uber has basically said that many of their partnerships are what's driving this increased revenue, that was positive, and we were grateful for it. I was able to bring this through Revolution Radio. And so you guys got it first. And then I gave it to Charles Payne and the folks over at Fox Biz, and they also appreciated it. So it was a good week for this particular trade. And like I say, it really was because Uber has been doing very well with both partnerships and 2 billion rides. I mean, my gosh, that was all really good stuff, Rob.
And what do you think it is, John? And you guys just weigh in on this. I mean, the rideshare business is pretty mature at this point. I mean, I know there's only two choices. I tend to pick whichever one's cheaper or faster, depending on the day. And why do you think Lyft fell?
I think Lyft fell because they didn't have the revenue drivers that, quite frankly, that Uber has. But Uber had to pay a price for those drivers. They've invested more heavily than Lyft has. And I think that was really the main thing, Rob, that caused them to outperform during the quarter. I don't think it's a one and done. I think it continues. And like I say, we had more unusual activity again today, Thursday, into tomorrow, Friday's data. So I would be comfortable holding on, but I'm not a pig. I think the smart thing is take profits on the first trade and then perhaps move on to the second trade in Uber.
Well, Marc, bringing you into this because, Marc, car theme, you went with Tesla, which is up a little over 7% at 4 p.m. on Thursday, and that could also be moving up a little more too. Your thoughts on it, and
you know what, Rob, we have, and on the price movement and action we saw this week in Tesla, I really attribute it to more the technicals than the fundamentals. We talked about this on the last show, that just about every technical analysis that we ran on this thing indicated that if it broke through 197, 198, resistance level that the next leg was going to be around 208, 209. Of course, that's almost exactly where it closed today. So it's always nice when the technical analysis delivers as promised. John and I actually rolled out some of our Tesla position, took some profit on some of the option trades that we did a week or two ago. Still maintaining. I think it's still got some room to go. I don't know that it's got near-term parabolic room like it did the week before last. So as John was just saying about Uber, take some profit off the table. Don't be a pig. But we think there's still some more upside room in Tesla. We're also pretty pleased with the performance of the other two picks from last week, as you and our viewers and our listeners may recall. The other two stocks I discussed were Raytheon, the very well-known aerospace and defense concern, as well as Activision Blizzard. Both stocks posting between a 3 and a 4% return. Nothing crazy, but also certainly nothing to sneeze at. And we maintain bullish positions, particularly on Raytheon. You know, I had the pleasure this week, Rob, of interviewing Ambassador John Bolton, Brigadier General Anthony Tata, who was the number 3 man in the Pentagon at the Wall Street conference that we just completed here in sunny Miami, Florida. And both of them confirmed the concerns that we shared with our listeners last week. We are out of bullets in this country due to our support for the Russian incursion in the Ukraine. Certainly not criticizing that action to support the Ukraine and defending itself, but it has put the United States military defense complex in a weakened position. We need more munitions. It is definitely creating opportunity for concerns like Raytheon. I am maintaining my bill call on Raytheon.
What would be another defense stock that might fit into that? I mean, right? Because kind of what if I'm reading between the lines, and again, yeah, being supporting Ukraine is not the same as saying there aren't costs for that. And one of those costs you're saying is we're not going to have. We need to shore up our military supplies. We need more bullets, as you put it. Picked Raytheon for a reason. Maybe part of that was the technicals or the fundamentals. But what would be another one? And is it the industry as a whole to keep an eye on?
So part of the reason for Raytheon and part of the reason for the other symbol I'm going to give you, because I do have one teed up for you, is General Dynamics. It relates to the specificity of what we are low on. And I won't get into that because some of that is I've been asked to not get into specific detail there in terms of what we may be low on. We don't want our enemies to know that. So I'm going to respect our friends in the military. But General Dynamics and Raytheon, they make the kind of shit we need. So that's why those are the two names that I continue to watch and maintain a bullish call on.
Awesome. I like that you keep your classified documents in a safe place, Mark. Are they parked next to your Tesla?
They are, and the rest of them are parked next to my Corvette in my Delaware beach house garage.
Alex, welcome. So, Alex, I want to talk about GRT, which posted up 13%, a nice upkick. And then I want to talk some bigger crypto news that's breaking that you have for us. But let's just start with your pick. You did well. You called it right. What's your take going forward? And, you know, when you look at it, like, why do you think it performed so well?
Yeah, no, thank you. I mean, it was a great pick. I loved we had a couple of really good ones put in the basket the last week or so. Problem we're having now is it's a big news day for crypto. The crypto's been tumbling over regulatory concerns, regulation by enforcement, a lot of breaking news that's been happening a couple hours. So it's really sending the markets down, in a pretty good fashion, all correlated to each other. Now we go to GRT. I like GRT. We made some good money on GRT. It's still up 105% for the 30 days. It's still up 56% for the 7 days. But with this market downturn due to news, we're down 16% in the last 24 hours with a 236% versus average pump in volume. I'm glad we got in it when we did. I'm glad we got out of it when we did. And hey, lesson for all, take profits when you can, because you don't want to be the hero who goes down with the ship and keeps trying to chase it. But yeah, it was a good pick. Really, really enjoyed it. Really happy with the performance of it.
Let's talk, guys, about the news in the cryptoverse, in the crypto markets.
It's stuff that's kind of been simmering in the pot for the last couple of months, and now it's starting to boil over. Just to give everybody perspective of what's happening, I was sitting on my positions in Bitcoin. It's down 4.6% today alone, 21,900. But Ethereum down 6.5% just on the news that's coming out today. The lowest sentiment I've seen on Ethereum ever, to be honest with you. It's 19 out of 100. It is extremely bearish on our indicators. So not really happy with what the market's doing, but not completely unexpected.
What about, John and Mark, we've talked a lot about regulation, and that we knew that more regulation is coming. John, you've made the argument that we may have enough regulation, but we all see regulation coming, especially in the wake of FTX and all that. And, attempts to control the space, manage the space, in some cases well-intentioned, some cases maybe not. What do you see in what's happening today, the last couple of days, and sort of, basing on what Alex is saying, like looking at this as a market space?
I think Alex has been nailing it. The worries now are that the regulators are focused in on that staking process, which means that people that own the cryptos can get paid extra interest by basically staking or putting their coins on a platform. I think that the fact that they're going after that process, Rob, is something that is a big negative for crypto.
How does that play out, John? I think a lot of people don't understand that. I'm glad you explained it, that the staking is you're owning the coin and you're getting extra interest, right? So in a nutshell, what are the regulators doing?
Well, the regulators are saying you can't do it anymore. The regulators told Kraken, I think, Alex, the regulators are basically saying, look, we were behind the curve, the learning curve, that is. We didn't figure this out till now. And now we're going to basically say anything you can do with crypto, we're going to go after you for it. That's not a positive for crypto in the short term. Long term, they won't be able to stop it. But short term, obviously, it pulls a lot of US customers off of sites exactly like what it was meant to do.
Yeah, Rob, let me just unveil what's happening right now. Is Kraken just settled $30 million with the SEC for selling unregistered securities. Part of that deal was that the SEC asked Kraken to shut down staking. Staking is built into smart contracts. So, let's say you have XYZ crypto, maybe it has 5%, 6%, 7%. In the smart contract, that automatically stakes when you hold it in a particular wallet. They're saying that can go on no more. We're not talking about like a Voyager or Coinbase where, they're paying out of a treasury on their own for people and holding stuff in their wallet like a reward system. This is literally staking interest generated on the blockchain. And so they're saying no. And so they sort of I don't know how to properly phrase this, but blackmailed Kraken into shutting that program down. You're now going to have other U.S. exchanges that are going to shut this down because they're scared. Nobody wants a Wells notice. And on top of that, an hour later, we get breaking news that Paxos, a New York State trust company, one of the most regulated crypto entities in the U.S., is now being investigated by the U.S. And of course, they are the people who run the BUSD stablecoin. So take it for what you want, but it's coming down hard and it's coming down fast. Sorry, Mark.
Well, no, that's okay. Look, just to chime in, Rob, I still have to put the lawyer hat on occasionally. If you go back and listen to any of the speeches that John or I or often together gave a year or even 2 years ago on crypto regulation, what we anticipated that the focus of enforcement would be, we always talked about staking, right? And the reason is it looks too much like an activity that should be regulated as a banking activity. I put money in the bank gives me interest, it's a certificate of deposit. This is just another way or another flavor, so the regulators would view, of that kind of activity. It's an easy target, and we have felt for a long time now that it was among the most vulnerable. The other thing is, and unfortunately, I love being right about my stock picks. I hate being right about my regulatory picks because it doesn't help the industry, generally speaking. Sometimes it does, but unfortunately, it's the exception. We are seeing regulation. We keep talking about regulation. Guys, this ain't effing regulation. This is enforcement. And it's exactly how Alex just described it. You want to shut down staking? Well, you could go through the regulatory and legislative process, but that's a pain in the ass, and that's a system that's broken. So the easier way to do it is in the context of negotiating settlements with industry participants. You get that in the language, and guess what happens? you're going to see other dominoes fall. Staking in the U.S. is at great risk and is probably heading to a swift end.
Mark, we've all talked about, this idea. It is really regulation by enforcement. That is how they are clearly, I think you guys would all agree. They are deciding we are going to regulate by enforcement. And that's how we're going to let you know what's going to happen and not happen. And it's why, right, Alex, you're saying people are going, I don't know, I don't want to mess around in this. I don't want to be next.
I find it, unfair. Mark is absolutely correct. The thing that I am finding unfair is the difference of manual rewarding, such as, exchanges paying out of their pocket or out of their treasury a certain interest or percentage, as opposed to an automated function that's happening in a smart contract. I think the U.S. is going to fall very behind in innovation and users.
Great stuff. You guys are just always on. We've got the cutting edge of everything. And another area where there has been a lot of regulation, which I want to jump into, but a fun area, is the area of sports betting. It's Super Bowl weekend coming up. FYI, John, we're going to talk for a minute about you because, you were in the NFL, as was your little brother. So you're going to have lots of thoughts, I'm sure, on this Super Bowl. But let's start just with the space alone. I mean, I read a thing that Morgan Stanley estimates it by 2025, the sports betting will be upwards of $7 billion in the U.S. and globally, it's like we're looking at like $70 million. And on the Super Bowl alone, Forbes said it was $16 billion on the Super Bowl last year in sports betting, 100% up from the year before. That's the American Gaming Association. I mean, this is a huge space. And just to set up the conversation, I think a big part of it is the number of states that have legalized either in-person sports betting or mobile sports betting. But it's legal now in 36 states. It's mobily legal in 26 states, and it was only 18 a year ago. So I saw a number, 60% of adult Americans live somewhere where it's legal to bet on sports, either in a casino or on your phone. So we have a massive market space. Just big picture, what does that mean? What does that mean as an investor?
It's a longer term bet. I would point out, Rob, that only about 1/8 of the bets are legal right now. Most of the betting is still, so 7/8 of the bets are illegal, placed with bookies, non-regulated entities. That will change over time as long as the lines are similar. Unlike drugs, like some of the class A drugs or whatever, marijuana and some of the psychedelics and things like that, they are taxed so heavily that people on the illegal side still benefit more than the legal side of drugs. So if you go to a dispensary, for instance, where they check your driver's license and you can pay a 50% tax, that's really been boosting the sales of illegal drugs. The bets that people place on these, whether it's FanDuel or, any of the sports betting sites, MGM, Win, any of the traditional sites right now that are ubiquitous, they're only getting 1/8 of those bets. But it isn't because of the tax. It's primarily because it's not legal in all 50 states. I think that's going to get to more towards 50% of that huge pool of 8 billion just bet on the Super Bowl. I think that will probably overwhelm many of these books going forward, Rob. So that's one of the things that I would be betting on when I'm buying MGM, when I'm buying Wynn, or when I'm buying Caesars.
Got it. And what about DraftKings? And you guys feel free to jump in on this. Their DraftKings revenue. I looked this up. They've had $1.5 billion revenue last year and 250 million net income, and they credit a lot of that to their expanded online offerings. In sports.
Let me tell you something. I'm going to pop in here, and I know it's John Mark's world here, but DraftKings, I invested into DraftKings, took a position in it during COVID. I expected what happened to the crypto markets to happen to gambling as far as consumer attentiveness to being trapped in their house and looking at their computer. it didn't perform as I expected. I would love to ask Mark and John what outlook has changed to where this might be going into the alpha territory.
I'd say that it's just like AI. It's going to take time. There's no switch that gets thrown, and there really is no hotter topic, even in Super Bowl week, than AI, artificial intelligence. But that doesn't mean that it's ready for prime time yet. So I think you're in the right space, Alex, but you're going to have to be patient if you're in that right space when, like I say, only 1/8 of the bets are being placed legally and the rest are illegal bets. So I think you're going to have to be patient to get a reward from that. Now, if you're betting on other things out of the sports betting space, I think you can be rewarded more quickly.
Totally agree with John there, Rob, and I like to try sometimes to draw lessons or corollaries from these things that our listeners can apply in their investing protocol and discipline in general. And that is, this is something we see almost 100% of the time with the emergence of a new asset class or a new business model. There's a lot of hype, there's a lot of promise, there's rapid growth, there's rapid innovation. As I always say, regulatory certainty drives acceptance of a new business or asset class at scale. And of course, that's what we've seen with online sports betting, with state after state making it legal. But then, the sort of the hype kind of cools off a bit, right? The companies can't sustain that quarter after quarter, meteoric growth, and reality starts to set in. And I think that's exactly what John was just touching on. We're not saying long-term bearish on this sector, not at all, but it is definitely going to take more time for adoption to creep in, particularly, and John makes a great point around the amount of illegal versus legal stuff that still goes on. That paradigm needs to change for us to see the next significant leg up in this industry, in my humble opinion.
So does that mean, though, to your point about like what's useful investment advice for people? Again, we're not telling people what to do with their money, but if you were looking at it, or would you go casinos? Would you go, John was mentioning Caesars, Wynn, MGM. Would you go that route? Would you go a DraftKings? Would you, or FanDuel? I mean, where would you, or would you be like, I just keep watching the space and not dive into it right now?
Where I'm interested as an investor right now is more on the venture side of the business. So where we see the convergence of Web3, the metaverse, esports, and online gaming, because we think all of that is going to be coming together in the next few years. And so we're actually pretty actively looking at venture investments in that area.
That could include fan-owned sports, right? Like fan-owned leagues and things like that?
Or fan-participated leagues, yes.
John, with the right AI, you could theoretically come pretty damn close to making great picks.
Yeah, I think it's more likely that you see, Rob, AI working for investors, traders in events like the Super Bowl or World Cup, then you will see it work for stocks. They have basically said that they do not want AI working for stocks, just like they don't want AI working for how do you make a bomb? How do you do this? How do you do that? Of dangerous things or things where you would perhaps try to skirt legality. They want AI to be more answering questions and or perhaps producing content in the form that Marc might write it, or you might write it, or I might write it. So the fact that right now that AI is not for stocks, but it could be for betting, you could ask an AI, who would be the best prop bet for the Super Bowl between Jalen Hurts or Patrick Mahomes completing 5 passes in a row? And the AI could look at all the stats and tell you, well, Patrick Mahomes is going to be more likely to complete 5 or more passes and thus win you that prop bet than Jalen Hurts. For instance, I didn't ask AI that, but that's one of the things you could ask it, whereas you can't ask about stocks.
So what is your prop bet on that, John? Jalen Hurts or Patrick Mahomes for 5 passes in a row? I'm with
Patrick Mahomes for 5 passes plus in a row completed, and Patrick Mahomes for the first run of over 10 yards between those two quarterbacks.
Let's as we wrap this up, let's do a little Super Bowl picking. And again, full disclosure to everyone, John, you were a linebacker for the Chicago Bears before you became an options trader. Your little brother was a linebacker, right? Also for the Vikings. You know, you played in football, so you probably have a stake in this, and certainly an insight into it. I know it was a few years back, but it's a few years back. That's all right. And Alex is a professional athlete too. He was a race car driver, and AI can see AI in that too. And you own a NASCAR team now, Alex. So you know, race car drivers are serious athletes. So kudos to both of you. I was not a professional athlete. I don't think you were either, right, Mark? We went to law school.
That's a different kind of athletics, Rob. Yeah,
we have our own stories. So just let's do our fun Super Bowl picks. Obviously, you know, I'm not a gambler. I will admit, I've done fantasy. I've never actually gambled on sports through a sports betting thing. I find it fascinating. I think I'm going to start. You know, I just pick the team and a point spread. Like, it's about as basic as you get. I'm picking Kansas City but I think at the low end it's 3, and I think it could be by like 7. That's my big basic junior pick.
I don't. Is the spread still 1.5?
Yes.
Eagles giving? Okay. All right. So my pick is the Eagles. Fly Eagles fly. I'm gonna head right down to the sports book and do that on game day.
Yep. I think the most interesting bets, other than the ones I mentioned already, Rob, are Jalen Hurts over 237 passing yards. Nope. I would take the under on that. So I could bet 100, win 120 on that bet. And interceptions is another interesting one, because we both know that the more interceptions that either of the quarterbacks, Hurts or Mahomes, throws, the more we're going to see that team likely lose. I would say that Patrick Mahomes is more likely to throw a pick than Jalen Hurts.
Okay. Mark, you want to weigh in with a prop bet or
Eagles?
What do you guys all think the Eagles are going to win? Come on, Patrick Mahomes will play with one leg missing and still perform.
I just want to say that John is the biggest degenerate gambler out of us. I mean, he's looking at interception. This is why he's an options trader.
It's so true. I love it. Yeah, 230 yards. I'll go to 237 yards. I'll do the interceptions. I'm going to do the most runs, first 10-yard run. John, you're going to have like 30 prop bets out on this thing?
I will have at least 10 prop bets on it, and probably only one bet on the line, and that'll be Eagles, giving 1.5.
Couldn't get you to take any line. You guys know I'm a Packers fan. Anybody out there? So John played for my arch rival team. Of Aaron Rodgers going to the Bears. Not in this lifetime.
I wish. Yeah, no. If he goes anywhere, I think it's the 49ers, but we'll have to see, Rob. That would be an expensive trade, and he's only got a year or 2 left in him, I think.
All right, guys. Well, great show. Lots of fun. We'll see what happens. Are you, just FYI, are you betting on the Super Bowl, John?
Yes, I am. Like I say, I'll have as many as 10 prop bets and that one bet on the line itself, which is, again, Eagles, because I think Mahomes is a fabulous player and he could easily win the game for Kansas City. But my bet is that the line should be more like 3.5 rather than 1.5. And the only reason it isn't is Patrick Mahomes.
All right. And Alex, are you betting?
100%. MGM Sportsbook is in the Caribbean and legal.
There you go. 2 degenerates. How about you, Mark?
I'm not at liberty to say.
The lawyer.
That's classified with his Raytheon material.
I'm going to do John's prop bets on interceptions and 5 passes in a row. Guys, great show. Hey, by the way, next week's show, we're going to launch our proof of attendance NFT protocols. We're going to have a special guest. Not going to say who. Everybody listening, you're going to want to get your hands on one of these POAPs. You'll find them at revolutionradio.io. You click on POAPs and you can sign up for a community account. Gets you access to the POAPs, which are a proof of attendance protocol. And all I will say, in honor of Mark's cautious wording, is you will get something for it. You will pay nothing for it, but you will get something for it. All right, guys, great show. Happy Super Bowl weekend.
You too.
Thanks for joining Rob Nelson, Alex Mascioli, Marc LoPresti, and John Najarian with another great episode of Bulls, Bears, and Blockchain, twice a week on Revolution Radio. Whether you're new to the world of Web3 finance or an experienced investor, we've got you covered. Follow us on Twitter at GetRevRadio and visit our website at revolutionradio.io, helping you make smarter financial decisions.